small banks? Well, somebody has a sea change call on small banks. She is Collyn Gilbert with Stifel Nicolaus, and we'll welcome her today from New Jersey. Good noon to you, Collyn.
Great. Thanks, Tom. Good
You
to be
have
here.
been cautious since time began on the northeastern banks, and I'm going to suggest national small banks. Why the change now?
I think a lot of it has to do with the fact that valuations are to a point that's, they're factoring in significant credit losses going forward. They're factoring in another double dip or another recession. And I think at that point, if you look kind of at these banks' balance sheets, they're in better shape than what the valuations currently reflect. They have more capital. They have gotten through most of the credit issues. They've built reserves and are fairly stable. So I think from that standpoint, you've got also stable dividend yields and the potential for consolidation. So I think, these valuations are reflecting, doomsday, and I just don't see that happening right now.
Okay, let's look at a doomsday chart. Wait, consolidation. And the headline is merge, I tell you. Okay, so consolidate, merge, whatever you want to call it. Collyn, I've heard this for years. It doesn't happen. When you talk to the owners of banks that would consider merging, is it ego? Is it a behavioral construct? Is it a financial ratio analysis that's holding up the mergers we've all been waiting for?
I think it's all of those factors. I think the one most important thing that you mentioned is, and I think people overlook that, is the emotional component. I mean, this is a huge step for a lot of these banks to sell their organizations and to sell them at valuations at, historical lows. So I think that's a big one first, is the psychology of actually selling in this kind of environment. And then I think the second point is that we're not finding the buyers and sellers matching up on what the book values are really worth, what these loan portfolios are really worth. I think, you've got sellers that are maybe, marking their portfolios to sort of current appraisal values, where you have buyers that want to mark the portfolios to disposition of the assets. So
right.
I think there's a financial mismatch as well, but I think the psychology of it is probably the most driving factor at this point.
Collyn, I picked one of your banks that you like, TrustCo, because it was under $4 a share. 5 Cernowski Drive, Glenville, New York. Gilbert reassesses value. Here's TrustCo, TRST. Down it goes. Shares are on sale. Just as one example, why should I buy a $3 stock?
Well, because these guys have a business model. They're portfolio mortgage lenders, which in this environment is a little bit tricky. However, they're still getting decent growth, and it's very, very core funded. So the spread that they're actually making on their loans right now is wider even than some of these commercial banks that are pricing a lot of their assets more off of LIBOR and Prime. So it's a small bank. There's deposit franchise value in upstate New York. They've got one of the top market shares in the Albany MSA, and it would be a nice fill-in at some point for a larger bank to come in and take that deposit franchise. So we're looking at it, as a business that's somewhat stable, a valuation that's reflecting certainly worse conditions than what they've got, and there's a decent enough deposit franchise that down the road somebody could be interested in just sort of filling in that market. Do
they have a free cash flow to reward shareholders now as they all age and get gray? They age. It takes forever for these guys to merge. Are we going to get paid along the way?
It's true. Well, you are, and that's part of the reason why we're recommending it. I mean, these guys are growing their tangible book value, they're improving their profitability, and they've got a decent dividend yield. So, yes, I mean, you're not going to get paid exorbitantly, but I think, the growth in the tangible book value alone, as well as the dividend yield, will get you paid. Certainly at least in the next 12 to 18 months as we see it.
Where is the value in the United States of America? You cover the Northeast, but if you had to pick one geography, do you pick the farm states because agriculture is doing so well?
That's a possibility. One thing that we've looked at too is parts of western Pennsylvania. I know earlier you guys had talked about the Marcellus Shale region, and I think you've got to find pockets of economic activity, and that's one region that, while not in the near term do we see much coming out of it, I think longer term, assuming or depending on where natural gas ultimately falls as an energy source, I think some of those slower, more rural markets are places to look at.
Very good. Let's leave it there. Collyn Gilbert, thank you so much. Stifel Nicolaus, small cap banks. We don't